Just a quick disclaimer before we start. The content in this video is general advice only. Please seek professional advice specific to your circumstances before making any decisions. Hello and welcome to Marketing Evolution podcast series. It's me, Alexi, here, and today I've got Brad Bell from Brad Bell Financial Solutions with me. Hey mate, how you going?
Great, Alexi. Thank you. Yeah, thanks for having me.
All right. Well, look, this isn't our usual episode. The marketing evolution's obviously touched a lot of people, whether you like it or not, due to the COVID-19. I think there's a lot of questions around the financial planning that I personally would like to ask. And I think there's a lot of things that people need to know about when it comes to things like superannuation, insurance, and so on and so forth. And my motivation behind this is the recent passing of our friend who unfortunately didn't have life insurance in place. And I think the stress and all the paperwork behind the
Yes,
scenes is just terrible, and I wouldn't want anyone else to go through. So before we jump into anything like that, Brad, over to you. Why don't you introduce yourself, your business, and tell us what you do?
great. Certainly. Thanks, Alexi. Yeah, so look, I have been in the industry for probably longer than I care to admit, but about 25 years or so. I mean, financial planning is broken typically into two areas, and probably 65% of what I do and revenue-wise is actually based around personal risk protection, which is insurances, and that is certainly an area that I've gravitated to. And over the years, because of my experience, I've actually been invited to even help fine-tune particular products within insurance companies. So I have a lot of experience in this area, and I enjoy speaking to my clients individually and helping to solve their particular needs and goals as far as protecting their circumstances, whether it be protecting businesses or their families if something goes wrong.
Yeah. Well, look, I've known you for just about over a year through BNI, and I think every time you speak, there's definitely a lot to take away. You, work with people in very different situations, and I think overall there are many different solutions that you provide to people. In terms of your business, what's the 80/20 within your business? Is it mainly life insurance, income protection? How does that work for you?
Yeah, that's a good question. So typically insurances are broken up into lump sum and income stream type products. So lump sum we categorize as life insurance and TPD. A lot of people are reasonably familiar with that terminology because they're the automatic types of cover that are attached to superannuation funds. So any award superannuation funds, you usually get automatically invited to take advantage of those type of benefits. Life cover is life cover. One little thing on that one is probably an area that people aren't that familiar with, is the fact that if a person's ever diagnosed with a terminal illness, life insurance, it can actually be brought forward. So if a medical practitioner declares someone is terminally ill and they have less than 2 years to live, they'll actually bring those benefits forward. That's just straight life insurance, and it's very standard. So that's a component. Typically, that's linked with TPD. That actually stands for total and permanent disablement. Now, it's not the most easy product to achieve a successful claim because of the sheer definition. You have to be totally and permanently disabled, never to be able to perform any job ever again. So it's called an any occupation definition, where the other disability product is an income protection, which is an income stream, and that's normally based around an own occupation definition. So consequently, a lot more easier to qualify for a successful claim under income protection, because as long as you cannot perform the duties that you are qualified by education, training, or experience, if you can't do your job, then you're eligible to lodge a claim. So they're the different types of disabilities. Income protection probably represents a good 50% of all my protection holders, because I have a lot of self-employed people, and that means that as a self-employed person, they are no longer covered under work cover. So if they're not covered under work cover, they need to look after themselves. And in fact, it can often be a condition of employment. So if I've got a young self-employed builder and he's contracting up the chain to somebody else, they have an obligation to say, hey, I need to see your policy numbers to meet their requirements, and it goes down.
Okay.
So it's quite common. We would get asked on a regular basis, hey, can we have a certificate of currency, Brad? We need to prove that we have something in place.
Mm-hmm. So before we jump into that, let's just take a step back. I mean, obviously for you, this is an everyday conversation. For myself, and I'm sure for a lot of listeners, a lot of these things are like, whoa, this is important, but I'd really like to understand it a little bit more. I mean,
Sure.
all this stuff is obviously optional for people who are employed, and a lot of things are being provided by the employee under work cover, as you said.
Yep.
However, self-employed is a different scenario, and we'll touch on that. But before we sort of go into it, everyone obviously in Australia has got superannuation. So what does superannuation include by default usually? And I know every single case is different, everyone's circumstances change, and overall, like, what are you covered with under superannuation?
Yeah, typically that's a good question. So depend on the various types of funds. So if you're, it does vary, because if you're an employee of the government and you're under Q Super, those benefits tend to be, because you're a public servant, can be a little bit more enhanced than the standard Sun Super. But let's use Sun Super as a standard example. It's a common fund, and Australian Super. The standard benefits that you get are based on units of cover. So they usually allow X amount of, maybe 1 or 2 units of cover automatically, so you don't actually have to apply for the cover. It's automatically included once you become a member, and it usually includes life and TPD. Now, some of these funds have a temporary disablement benefit, but it's not like purchasing a retail one, and the reason being is that it's very watered down. It typically would have like a long, like even Q Super has a 90-day waiting period. So basically, even if we have a public servant that's had an injury or a sickness, they will not get anything out of that particular benefit for the first 90 days. They are forced to use all their holiday pay and sick pay, and they still may be short. This benefit would only kick in after 90 days, and it will only pay a maximum of 2 years.
Okay.
So that's, if we would make the comparison to a retail product, you can be covered, from a 30-day wait if you want to, or even day one for accidents, but it will pay you right through to age 65. So it's a massive, massive difference.
Oh, wow. Okay. Well, I didn't know that. And I think a lot of people are very naive when it comes to that. And I guess with work cover for employees and stuff, what does that
Yeah.
include? And I guess, every employer pays their work cover to cover their employees, but a lot of people still don't know what it actually includes.
Yeah, that's a good point. So work cover, the best way is to give a quick analogy of the work cover versus a retail scenario. So work cover covers people when they're at work, basically. So it actually covers you on your way to work and on your way home to work, but it only covers you when you're at work. And if something was to go wrong, it primarily will cover you for a maximum of 2 years. Now, once again, if a person has their own personal policy, it will cover them 24 hours a day, and it will cover them 7 days a week. And if that person cannot perform the duties of the job that they're covered for, it will pay right the way through to age 65. So once again, completely more poles apart as far as comprehensiveness within those products.
Okay, well, that's pretty interesting. And I guess if you're a self-employed, and that's a bit of a mystery for a lot of people, because I think many people find they trade and they tend to sort of start the contract and go into it, but hardly anyone sort of looks at it and reviews it. And I guess for me, a good wake-up call was the Barefoot Investor book, and I'm sure we'll talk about that in a minute as well. But
Sure.
just the absolute basics in terms of what's included under super and how things could be done. And look, it's all obviously good advice and everything, but overall, everything's very, very, individual to each person, I would imagine. So what would a self-employed would need to have in place in order to continue operating and not have to worry about these sort of products?
Yeah, that's a good question, Alexi. And so in my process, we actually unfold that. It's through a comprehensive needs analysis. As you said, we're talking about general circumstances and general advice at the moment about products and things. When we actually receive a referral or sit down to further look into someone's unique circumstances, what we're trying to understand or develop is their circumstances. So if you talk about a self-employed person, they probably will need income protection, because that often, as I said, like in the building industry in particular, becomes a condition of employment for them to hold a current in-force income protection policy, because they are not actually covered. So even if we're talking to a director who might employ, say, 10 people, so he's still being paid by his business, but because he's a director, he's actually not covered under work cover. So it's imperative that he holds his own individual personal private cover. So that's income protection. And then secondly, our process would then go into this needs analysis, where we're determining, and the real, without putting any science or any sort of too complicated measures around it, the real quick measure for me is that we want to make sure that there's enough life insurance available to pay out the debts. So the debts is a good one. And then secondly, if there are dependents. So if we've got 2 children under the age of 10, we can help with our modelling tools determine appropriate levels of buffer, financial buffer, that would be able to make sure that those children can continue to go to school if the absolute worst happened to their parents, or one or both of the parents. So that's pretty well what we're looking for, is making sure that it's all-rounded sort of thing. But I guess the other product that we haven't mentioned yet is trauma recovery. So you've got life and TPD, which are available through automatic cover, through superannuation funds, which we discussed, and possibly income protection benefits. But secondly, there's the lump sum benefit known as trauma. The way I like to explain trauma recovery is just like life insurance, except you don't have to die. And it's payable upon diagnosis of things like stroke, heart attack, cancer. There's about 40 very specific things that as soon as we get medical advice to confirm that person has had a malignant melanoma, a myocardial infarction, which is a heart attack, etc., then as long as they're still alive, we will actually be able to get that check drawn up within 30 days. So some examples around that one would be that I've had 8 of those claims in the last 2 years. Okay, the last one was a builder at Wynnum, and we paid out $250,000 upon diagnosis of his prostate. He ended up having a prostate cancer. Prostate was removed, and he's completely recovered, albeit he doesn't have a prostate, but he is certainly living a normal life, back at work and no problem. So he qualified for income protection as well. Income protection because he's self-employed. He had life, TPD, trauma, and the whole shooting match. And the trauma, even though he received the $250,000 payout, works completely independently of his income protection. He still has to qualify in his own right for income protection. He couldn't go to work while he was in treatment, etc., and that also worked completely independently. So trauma, I mean, I'd love to give you some more examples. One that springs to mind, which is a similar scenario, where a good client of mine, had all of the ambient, the types of cover that we've just explained: life, TBD, trauma, and income protection. He runs a mechanical workshop down in near Moss Street there in Slacks Creek. Yep. He's got about 8 employees where they repair motors and do services on cars. And every afternoon at 3 o'clock, the boss, who was my client, says, "Right, boys, we'll have a beer and then we go home." So they all have a beer at 3 o'clock. One particular afternoon, this is a couple of years ago, he passed blood in his urine. He went straight to his doctor and was diagnosed with 4 little tumours in his bladder. 2 of them were malignant, and 2 of them were benign. Now, because had they have all been benign, he wouldn't have got his trauma payout because it's not cancerous. But a malignant melanoma is cancer. As soon as we had that diagnosis, we had a check for $410,000 for him, and that was payable tax-free because of the determination. He was never off work long enough to qualify for income protection because he had 3 individual days of treatment of direct radium and never missed a beat. He's fully recovered and moves on. So that's the beauty of trauma recovery. It's a benefit, as I said, that it's just diagnosis of either you are in or you are out. And that guy ended up buying the shed across the road from where he was renting, and he owns that shed, and that's now where they work from.
Wow, well, that's quite a story, and I'm sure you've got quite a few examples like that. I guess
Absolutely.
a lot of people are just unsure where this all starts, and I think some have fairly savvy accountants who can potentially identify certain things and say, "Hey, this is tax deductible, or you need to do this, or you can do extra contributions through your super." I mean, which of these products are tax deductible, especially for self-employed, and can you potentially do salary sacrifices as an employee to get some benefits for the other if you're employed?
Very, very good point. So let's talk about a PAYG, an employee first. So typically, life and TPD insurances and income protection, and an employee, you can have income protection without being self-employed, and that gives you the benefit of being covered 24 hours a day and payable right the way through to age 65. So there's no problem there. With that though, it just income protection, fully tax deductible to everybody, whether you're an employee or you're self-employed. There's no problems there. Life and TPD, if you're an employee, the way I structure that is by a yearly partial rollover from your superannuation. The reason we do that is that enables the client then to make additional contributions into their superannuation, as you indicated, as a salary sacrifice. What that's doing is giving you the net effect of funding those particular components with pre-tax dollars. So out of the 3 styles or types of products there, we've got income protection that's tax deductible whether you're self-employed or not. You've got TPD and life cover, which can be funded in a tax effective manner. The only one that's not really tax deductible is the trauma recovery component. That has to be funded from out-of-pocket expenses, but with saying that, the benefit is tax-free, like I explained earlier.
Okay, well, that's a really good answer. And look, I think a lot of people just don't realize what this is all about, and oftentimes there's just not enough information on it. So that's excellent. Well, look, I guess overall this is a huge topic, and I think it would vary from one person to another, whether they're family, whether they're single, whether they've got certain properties or a portfolio of things to protect as well. I guess what's the easiest way to approach someone like yourself? And I mean, let's be upfront here. How do you make your money out of this whole thing? Because a lot of the time people are a little bit disheartened and they don't really know how to approach someone because they think it's going to cost them an arm and a leg. I mean,
that's a very good question, Alexi. Yeah. So once again, financial planning is broken into 2 particular styles or categories. One is the risk protection. One is the financial planning where we give advice and help people with their retirement savings and that type of thing. And the first one, which is insurances, we actually get paid a commission for placing the business with a particular product provider. Now, whether we choose, and over the years, those figures have varied from companies to companies, but reasonably similar. As of the last 5 years, the Royal Commission and various other commissions that have been evoked prior to that even, there's been a sort of trying to get a consistent approach, and now there is. So if we place business, whether it be with MLC, Clearview, AMP, or whoever it's going to be, we actually all get paid the exact same amount of money. And the only criteria for the client is that if the business has to stay in the book for at least 12 months. So if we prepare our documents and make recommendations from an insurance point of view, we get remunerated from the insurance company. So we get paid an upfront fee, and then we also get paid an ongoing trail commission and that is designed so that we are obligated to make sure that our clients get ongoing service. And that's what we do. So every year we have an ongoing annual review process to find out what's changed in their lives. I mean, some people sell properties, or their children might leave home, or some people might buy additional properties and have more children. So in either case, circumstances change, and we have to be ready to adapt and move and assist them to making sure that the package that they have in place still represents their circumstances, but is also still sustainable for their pocket. There's got to be a happy medium. So as you would imagine, there's various modeling tools that we use. Well, that's great, but sometimes it comes down to common sense and affordability. We have to sort of work out and prioritize, well, how can we make this work so that we can at least make this work to a person's budget and circumstances. After all, everything that people spend in this particular area is something they hope to never have to use. But if they do, we've got to get that balance of spend versus return, or spend versus security that they want to have in the event of something going wrong. The only other flip side to that was the investment structure from financial planning. We actually engage, once again, on an individual set of circumstances for clients, and it's called a fee for service. So it depends on the actual scope of advice that we're looking for. Some people transitioning into retirement might be trying to sell down properties and just take advantages of the various investment strategies available through superannuation, etc. But that's all done and negotiated and very transparent on a fee-for-service basis. So there's no remuneration or commission coming back out of the products on that side of it. So they're 2 completely different ways of being paid.
That makes sense. Well, I guess from here, you normally offer people a free consultation just to review their stuff, and from there, you basically would be able to identify how you can help them. Is that normally the way it goes?
Absolutely. So our first consultation, whether it be via Zoom or whether it be face-to-face, the process is simply having a first consultation absolutely free. Look, I don't profess to being able to help everybody. Some circumstances, you know, if just depending on the circumstance, but normally it's the approach of if the person's comfortable with me and I'm comfortable with them, and we work out that there's definitely solutions that could be made according to their circumstances. Well, yeah, we can then sort of open it up from there. But that first consultation is really exploratory from both sides, and some people may also say, yeah, now that I have a better understanding, it's not my cup of tea. But more often than not, it's well, that was less invasive than what we thought it was going to be. And you know, like often the funding mechanism from superannuation, that people may not necessarily immediately be in a facility or in a position to be able to make that additional salary sacrifice back into to compensate. But that's not the end of the world. The cover for a self-employed builder might be more important to hold at the moment than actually trying to come up with the funds and replacing that money out of superannuation. We can catch that up at a later date when we become engaged from that aspect. So that's not a problem at all.
Well, it sounds like a lot of different approaches to this whole thing, and yeah, mate, I think absolutely. There's a few people who may need, you know, your advice and potentially need you to, you know, help them understand this a little bit more. What's the easiest way for people to get in contact with you?
Absolutely, Alexi. Look, obviously through yourself, but my website, Brad Bell Financial Solutions. We have contact details through there. And I'm based at East Brisbane here, just right next to the Gabba Cricket Ground. We have parking and on-site facilities here, but basically make contact with me via the website. My mobile phone number, our landlines, they're all contactable there, all via email. We'll initially have a chat over the phone and see if we can make up a time that's mutually convenient, and we'll go from there. But as you indicated earlier, Alexi, it's really about sort of assessing everybody's individual circumstances. Everybody's different. Everybody's on a different part of their journey. So we need to work out how do we fit in and how can we solve their situation now, give them that financial security to know that either their business or their family are going to be protected during those times of need. So, I mean,
Great.
and it could even be more of another aspect of probably what we do is called business insurance, where a director of a company may have some key people in his business. So we can structure insurances that would protect his business if one of his key people had a heart attack, for example. It could provide like a cash injection to his business. So there's various aspects and things that we can do. But I am more than happy dealing with mums and dads and everyday people, whether it be sole traders or whether they employ a couple of people. At the end of the day, if I get introduced to a person who employs, you know, half a dozen people, a dozen people, we end up acting for a lot of those individuals underneath that structure as well, which is fantastic. It's my business is made up of referrals. It grows and grows.
Great. Well, the way I see it is you look at the bigger picture, where a lot of the times people look at just the one product or one particular, you know, thing like superannuation, for example, mate. So I think your advice would be excellent. Well, mate, I assume with all this COVID-19 stuff, your business probably changed quite a fair bit with all the Zoom calls and stuff like that. How are you finding that, mate?
Yeah, it's been a great adaptation. I mean, we did various Skype meetings and things in the past. I mean, I've got clients in Perth, for example, but push come to shove, I guess the whole experience of having meetings. In fact, I had a client who was a member of a corporate superannuation fund that we look after, who had moved down to Sydney, and he just happened to re-engage out of the blue and said his circumstances have changed. He needs to completely review his risk insurances and his superannuation. We set up a Zoom meeting. We've got the facility, as you know, to share the screens. We can pull documents up and walk a person through individually. So even though he's sitting in Sydney, he could be sitting at Wynnum. It doesn't matter. We
Great.
can do and we've adapted to that very well. Apart from that, there's been some occupational groups that have suffered more than others within the COVID-19 scenario. So wherever we've been able to help, we can, whether that be assisting clients apply for premium holidays and various things like that. We've been certainly instrumental actually in helping out some very large clients that just have had their income cut off. So they still need the cover and they don't want it to lapse. And that could have been, that could be very instrumental when a person has had a change of health and they can't apply for cover anymore. We know all the tricks of the trade as to how to maintain cover without losing those facilities.
Great, excellent. Well, look, I guess there's probably lots of questions that people may have, and we've got quite a number of people on our call. I'd like to just wrap up this particular recording so that we can get into it. They'll be off the recording. But mate, I think, if this particular podcast can reach enough people and bring a little bit more awareness towards people's superannuations, life insurance, and so on, hopefully this will change someone's life and potentially, help them understand what's what this is all about and what the importance of it is, mate. So I really appreciate you for your time. For any of our listeners, guys, if you like the content, please make sure you subscribe to our channel. We're also on iTunes and Google Podcasts as well. So find us by looking for Marketing Evolution Podcast. And yeah, guys, we'll wrap up the recording and we'll start the questions. Thanks, Brad.